Today, there's just one other story we think you should know about, and that is that the Treasurer, Jim Chalmers, has directed the competition watchdog, the ACCC, to hold an inquiry into retail bank deposit accounts. Chalmers said it's a fact that banks have been a lot slower to pass on the increases in interest rates to savers than to mortgagees. I've asked the ACCC to take a good look at this and also to shine a light on the dynamics of retail deposit markets. Australian households have more than $1.3 trillion in savings and deposits. And we'll put that to Matt Comyn, the boss of the Commonwealth Bank, very, very shortly. But as I explained, look, there were a lot of profit results out today. So let's bring in here Edward Boyd and also go through the markets, and Ingrid Willens, who's going to take us through the stock market reaction. So Ed, let's start with Australia's biggest bank, the Commonwealth. So how did that fare today?
Ross, Australia's biggest bank lifted its cash profit by 9% during the half year to about $5.2 billion and extended its share buyback by $1 billion. Operating income was up 12%, and that was due to higher profit margins on loans and deposits, thanks to rising interest rates. So its net interest margin was up 23 basis points to 2.1%. CBA is just over 1/4 of Australia's home loan market, with the portfolio worth $570 billion. About 66% of these mortgages are variable. The bank declared an interim dividend of $2.10. That's up 20% on the same period last year, and its return on equity jumped 80 basis points to 14.1%. Turning to the outlook, Chief Executive Matt Comyn said the bank remains optimistic that a soft landing for the Australian economy can be achieved.
OK, so they're the numbers, Ed. Thank you for that. Let's bring in Ingrid here. How did the share price fare?
Well, not good, as you can imagine. CBA shares fell sharply as soon as they came online this morning. Analysts think that bank share prices have peaked now that more customers have switched to term deposits, which have lower margins, with competition increasing. So you can see there the stock down close to 6% at the close. And there's the yearly chart for you for CBA as well. Interesting to take a look at some of the comps, of course, the rest of the banking space, because sentiment in the entire space today sinking as all the big four banks are at the bottom 10 performers today. You can see NAB down by about 4.1%, Westpac down by 4.3%.
Well, a little earlier, I caught up with the Commonwealth Bank's Chief Executive, Matt Comyn, and asked him about those margins and also the ACCC inquiry into bank savings accounts.
We're the largest financial institution, and the banking sector itself is always subject to a lot of scrutiny, and I think in almost all cases that's appropriate. We also believe that over the course of the calendar year, the price and cost of just about everything is going to come under scrutiny. I think that's the reality where households are dealing with inflation and increase in prices across a broad range of goods. I mean, we've seen fuel, groceries up sort of 13 and 11%. We saw an increase in travel costs just in the month of December by more than 20%. So we expect there'll be a lot of focus and scrutiny across a whole range of different industries just to understand what's happening in the broader community. That's, of course, responsive to what we see in customers being concerned and worried about the outlook that's ahead of them. And so, as I said, look, we're very confident about the way we're supporting our customers who have either loans or deposits and the support that we're going to provide. And of course we will, we've worked with the ACCC in previous inquiries, and of course we'll do so again.